This is massively bullish news. It's similarly bullish news compared to Blackrock filing for its spot Bitcoin ETF. And that news brought us from 25k in Bitcoin to 31k, a 25% increase. Fidelity is applying for a spot Bitcoin ETF. And Fidelity is huge. Fidelity has 4.5 trillion assets under management. It's pretty much half the size of Blackrock. And again, this ETF is a spot ETF. What's the difference between a spot and a futures ETF? A futures ETF is simply just a gamble with a third party on where the Bitcoin price might go. So you're betting, for example, with a bank, will Bitcoin rise or will it fall? And when you buy that ETF, you buy that long ETF and you're betting on the price rising, and the bank then has to pay you because they lost the bet. The reason why banks open these ETFs is because they do have their management fees in there, right? So they're pretty agnostic to where the price in the end will move. They're simply just betting against you. Now, when you put $10,000 in such a futures ETF, this does not move the price of Bitcoin at all, because they're simply just betting with another person on the side, right? The money isn't really flowing into Bitcoin. Nobody is buying or selling Bitcoin here. This is different for a spot ETF. In a spot ETF, the issuer is buying the coins. Fidelity, as well as Blackrock, applied for a spot ETF. So at the end of every day, they have to buy or sell the Bitcoin depending on how many people bought or sold the ETF. That means that the $10,000 you're buying worth of that spot ETF actually, at the end of the day, hits the market. For Blackrock, that's with Coinbase, so they will buy the Bitcoin at Coinbase. Coinbase also custodies their Bitcoin. The market didn't yet really react on this Fidelity news. There was also quite a bit of a lag after the Blackrock application. I'm not a fortune teller, I cannot say where the price will go, but my impression is that those news have not yet been priced in. It's really a snowball effect now. Any large issuer is now bringing out a spot Bitcoin ETF. There's real competition here. There's a real rush for gold, rush for Bitcoin. Accessibility to Bitcoin goes through the roof. You can now buy the Bitcoin for your retirement account. Of course, I still suggest, if you can do this, to still self-custody your Bitcoin, right? You don't want to have any third-party risk whatsoever, especially if Bitcoin really takes off, inflation really goes through the roof, the banks really are in trouble, then you rather have the money yourself, you rather have the Bitcoin by yourself. But if you don't have that option, you're limited for your 401k, for example, to use the traditional finance system, then those ETFs are an option, and they definitely will be used. It makes Bitcoin accessible for capital where it wasn't accessible before. And as mentioned, Fidelity is almost half the size of Blackrock in terms of assets under management. Things look bullish, but let's not sell just yet. I'm waiting at least for a new all-time high until I start considering offloading parts of my position. A new all-time high will happen for sure. It's not a matter of if, but just of when. The fundamentals are simply too strong.